It's a question of, on debt when it's really going to bite in the US. And to be honest, it's probably not going to bite until we get past the US presidential election and we're in early 2025 and we're trying to raise the debt ceiling again and it's a real mess in Congress. Then I think the market will pick up and pay more attention to the US debt profile, which isn't good, and neither is the deficit. But next year, the timing is all about rate cuts. When we get rate cuts, how much are we going to get in terms of rate cuts? So that's more the market driver for next year, and it's going to be the debt and deficit question for 2025.
And that is always the most difficult thing for any of our viewers, whether they are long-term holders, 5 to 10 year holders of an equity store or whatever, or they are short-term day traders. Your timing is everything. Your rationale can be perfect, but it's about your timing as well. So, given what you just said, is the market on for a sustained end-of-year bull run and then beyond that into the presidential election year, or actually is there something else you think on the horizon that people need to worry about?
So I think we need to take a step back. The thing that's driving the market at the moment is what's happening in terms of 10-year yields. We've come down quite a lot. So the market's gone from pessimism about rates remaining high for long to now sort of discounting 4 Fed cuts by the end of 2024. You now actually need the Fed to start signaling that they're going to ease, which I don't think is going to occur. Or you need the economic data to actually not just deteriorate, but actually maybe suggest a recessionary story, which would pull the Fed to ease earlier. But that's a double-edged story for equities if you get a recession. We don't think it's going to be that. We think we're going to slow down. We think the Fed are going to sort of kind of keep a steady mood. And then once we get into the spring, start to signal rate cuts by the summer. So what that means for US equities is a tricky period now because the easy bounce and gains have been made. And now we've got to navigate all of that for the next couple of months. We will get a rally. We think 4,800 by the end of 2024. But it's probably going to come more the spring, summer of 2024, and the next couple of months are going to be difficult and tricky. So you may get a long-term buying opportunity.
Well, this is going to be fun, isn't it? We've had a re-rating because of monetary policy, and we're not going to get the signals from the central bank because they're concerned about a reigniting of inflation story. This is going to be fun for the markets because the earnings are simply not supporting the re-rating story at this stage, right?
Well, the earnings, if anything, are deteriorating a little bit, and the market's a bit too optimistic about 2024 earnings in the US. So that's the other headwind that I think that you got at the moment. So it's going to be really tricky after the last couple of weeks of re-ratings. I think it's going to be sort of difficult for the market to make the US equity market to make much further progress.